In looking at 2009 and definitively at least in the first half of the year, and we'll wait to see what happens in the market as the year progresses, but the focal point in terms of on the restructuring side where we were looking at DIP financing and exit financing, we were all very accustomed to having an underwritten type of facility structure put in place. I think today in '09, you're going to see more. You're going to see much less in the underwriting side. You're going to see more on the anchor and arrange, the club facility type structure going back for a number of years. And then you're going to be looking at a couple of other things in terms of market depth. Market depth right now on an ABL, where we specialize in, is tight. You're probably looking at a $250 to $500 million kind of market depth parameter. Some of the other additional points you're probably going to be seeing for the '09 time period is you're going to be seeing an extended marketing time period. So as you're starting to go through this process, you're going to need to either corral your existing lenders and talking to them, start talking to your outside lenders that you may want to go to get a read on the market, but that market time period is going to be longer and the due diligence time period is going to be longer.
Obviously concur with what Dave has said, and I think just to go back to the fundamental question of is the market dead, I think it's close, but from a defensive standpoint, certainly not. From our perspective, I think we're starting to recognize internally, and it's early in our merger, but there's recognition at the highest levels that putting new money to work in the DIP market is potentially a pretty exciting risk-reward proposition. And so part of what we plan to do, going forward over the next year or more is to get in sync in terms of understanding that where the different pockets of capital are in the combined firm and getting that put to work into the offensive DIP situations. And I know in the past, I think we've been known for being active, obviously, in a defensive situation, but there certainly is a willingness. At least, and this is in flux every day, as you can read in the paper, but there's certainly a willingness to put new money to work at the highest levels.
As somebody invests in companies that need DIPs, I'm delighted to hear that Kevin and David are lending. We certainly have found that the marketing time is taking longer because of the way a number of these senior facilities were put in place, primarily with CLOs, highly diversified. It becomes really challenging to go back to your lender when your lender list, is 6 pages long, and it's all in tiny bites. And those guys don't have any new capital, so trying to go back to CLO to get them to put in a DIP can be a really challenging proposition in any case, in certain cases. So it's good to know that people are looking at doing offensive, not simply defensive DIPs. I would tell you, though, for a number of the companies we've looked at, particularly ones that are asset light, it is very challenging, and it's becoming more incumbent upon companies to, much earlier in their process, evaluate what they're going to do about their DIP financing. You can't sort of get your first day motions in place and then go, okay, now who's going to lend us the money? You really have to start thinking about strategizing. Do you file earlier? Do you protect more cash collateral? Do you work with your lenders in a more standstill position where perhaps you're not making some payments, but they're not throwing you in yet, and you're sort of working through some processes? It is a much more challenging dance than it was even 6 months ago this summer. So that has led, I think, the advisors, people like Mike and his colleagues, and a lot of the people here at the TMA, to work with their companies and really educate them on how tough that marketing process can be and allowing enough time to do it, which is tough once you start that spiral towards a bankruptcy. It's very challenging to manage that time frame.